Anthony, welcome back to the show. Let's talk some video games. What do you guys see in your data in terms of how people are spending their time on these consoles?
Yeah, thanks, Oliver. It's awesome to be back. So looking at the gaming industry, I think what's remarkable here is that it's staying hot. I mean, last year we had a lot of macro tailwinds that propelled mobile gaming to heights that it's never seen before. I think 2Q20 was in many ways the apex of that. It was up 55% in the US, 33% globally. It would be, I think, expected if it took a step back in 2021. But we're looking at the data, and for the second quarter of this year, we have mobile spend up 10% worldwide and 5% in the US. So even with sort of lockdown restrictions easing, people going back to normal, and I know there's a lot of caveats there given what's going on in the world, but mobile gaming is staying hot. You have a lot of new participants in the industry. You have a lot of consolidation. I think you see a lot of investment, and the investment's coming because that's where people are. That's where they're spending their money.
Now, how does it compare console versus mobile? Are you able to see that difference on where time is being spent?
So at Sensor Tower, we're exclusively mobile. So unfortunately, we don't have visibility into or PC. But on mobile, I mean, we're seeing, continued growth in spend. Some of the time spent for a lot of the big franchises has taken a little bit of a step back. We look at something like Roblox, and it wasn't what it was in 2020. But we're seeing continued user spend into the mobile gaming world. I mean, just in the US, we had about 6.5 billion in 2Q21 of spend on mobile games.
Wow. So EA has been particularly acquisitive in this area, in particular buying Gloom Mobile. The stock I would think, at some point kind of reflect that hedge a little bit, because once people leave their homes and they're not on the consoles, they'll be mobile while they're on the train, etc. So EA's doing all right. I mean, still down into their earnings after Take-Two got blasted last night. But what does it look like for that franchise, Gloom Mobile, for Electronic Arts?
Yeah, so EA is a company that I think is really doubling down on mobile. It's never been a massive part of their portfolio. I mean, I think of EA for their sports games on consoles back in the day. Their mobile portfolio is not quite that. Their biggest hit is a Star Wars game. They recently bought Glue, which is known for having a lot of casual titles that skew towards a female audience. They did go back to their sports roots in June and purchase a publisher called Playdemics from Warner Brothers. They have one hit. It's called Golf Clash. It's not like a Tiger Woods type golf game. It's a little bit more kind of slanted towards a mobile audience. But right off the bat, Golf Clash is going to be the second biggest game in EA's portfolio. And as we talked about last time, they have these two what are called Battle Royale titles that are in a Fortnite or Call of Duty style that are slated to launch later this year. I think those are big bets for EA. But what I would say is they're making these investments, but there are still headwinds with their existing portfolio, both their games and Glue games. You're seeing competition in the categories where those games participate. Our data for EA for the second quarter shows a step back, not only year over year, but even sequentially, which again is caused by some of those headwinds that are unique to the categories where EA participates.